because we're talking about the stock market. Let's see. Next one, this here comes from, it comes from Yahoo Finance. Uh, is the stock market crash coming in 2026? Here's what the data says. That a whopping 72% of Americans have a negative view of the economy right now, according to a February 2026 survey from the Pew Research Center, and nearly 40% believing economic conditions will be even worse a year from now. There's no way to predict what the market will do in the will do in the near term, but it can sometimes be helpful to look at history for guidance. Unfortunately for investors, two major stock market metrics are signaling that volatility could be on the way. Of course, volatility would be on the way. There's no doubt about it. You know what I mean? It's
Right.
not like, oh my gosh,
Yep.
we poisoned a bunch of poppy fields. Like this is oil. Everything
Hmm.
runs on it. I understand. People are like, oh, there's let's build wind turbines and a bunch of solar panels, and it's like both of those have negative effects to it. I've heard that windmills, they still need oil, to function so that the gears can turn. And I've heard that when you build solar panels, when you put them on the ground, that means whatever's underneath it is going to die because sunlight's
Yeah.
not getting to it. And in a quick solution would be we'll put it on top of buildings. My ex, her dad said that's not the best idea. It's great intentions, but when it comes to solar panels, a lot of these buildings, not granted, buildings can be updated, things like that, but a lot of these buildings weren't built with the concept of, okay, let's add, a couple 100 pounds of weight on top of it for fun. You know what I mean? They're meant to
Yeah.
withstand, you know, heat and a few inches of snow. And even then, generally, the snow falls off after a certain time. Now you have a couple 100 pounds of pressure for solar panels that don't even absorb enough energy to produce to power a house. Again, great in theory. I'm sure we can find ways to do it, like do it over the ocean. I don't know, but everything still runs on oil. Everything still runs on natural
Yep.
gas. Of course, it's going to be volatile because we don't know how things are going to look. And as you stated earlier, I stated a lot as well. Markets and money love stability. When things are stable and you can predict conditions, markets do well. When you can't predict what's going to happen, people take their money out of the market, that people stop investing because you never know. You know what I mean? As much as uh, everyday people are like, oh, stock market can be a gamble. You don't know. Like, if you can predict it, people are more willing to invest in it, even if you're, mostly wrong. But when things are as unstable as this, things are going to go down. People are going to sell. Now, granted, what people usually invest in when markets go down is like hard assets like gold, silver. I don't know about Bitcoin. I don't know about cryptos. I've seen reports that cryptos are kind of going through their own. Not crypto is always volatile. Let's get that out of the way.
Hmm.
Bitcoin and Ethereum are trying to break the standard, but the fact that we had like $100,000 a year and a half ago, I think, and now we're back down to 69. Nice. You know what I mean? It's still volatile.
No.
It's not a. What's that word for it? Store of value. That's it.
Hmm.
It's not like gold. It's not like silver. Like, yes, gold and silver do have their downs, but generally over time, I mean, the market does too, if I'm being honest, but most
Yeah,
of the
they tend to
time,
stabilize.
yeah, they tend to stabilize more. But like gold, people will take the money out of the market. They'll put it into gold because it's stable. You know what I mean? Theoretically, well, not theoretically. Actually, you can hold a gold piece. You know what I mean? I can't hold, 40,000 of Tesla. So of course it's gonna be
Hmm.
volatile. Duh. Thanks. Indicators suggest that. Sorry, indicators suggest the market could be overvalued. That's fair. That's absolutely fair. I'll give them that one. The S&P 500 Shiller CAPE ratio, or or clinically adjusted price to earnings ratio measures the S&P 500's average inflation adjusted earnings over the past 10 years. A higher ratio suggests the S&P 500 could be overvalued, and historically stock prices tend to decline after a peak. Duh, that's why it's called a peak. Uh,
Yeah,
and
obviously.
did you know that the price of a stock indicates how much someone thinks the price of the stock should be?
No way. What?
Damn it, hold on. I'm funny. in, in 1999, for example, the S&P 500 Shiller Cape, I'm just going to call it a Cape ratio reached a record high for around 44. Tech stocks have ballooned in price in recent years, leading to the dot-com bubble burst in the early 2000s. It also peaked in late 2021, just before the market entered a bear market that would last most of the following year. Yeah. As of the writing, the ratio is close to 40. This is the highest it's been since the dot-com bubble. Since the dot-com bubble more than 25 years ago. Oh my God, I'm old. Are you? And significantly higher than the long-term average of around 17. We've talked about this. This is nothing new. We've been talking about this for years, actually. Markets overvalued because interest rates were near zero since 2020. You know, COVID. In theory, I get it. In practicality, stupid. But, interest rates were cut. So people are more likely to buy stocks because banks are willing to lend out more. And people are willing to do that for sure. So bam, value goes up. And it's not like, now granted, like, I think like 2 years ago, interest rates were going up to 5, and now they're coming back down. We went from like either 5 a year or 5 a year and a half ago, and now we're down to 3. And we've heard reports that interest rates are going to be cut later again this year, or something like that. Yeah, that's right. Because we talked about like third tinfoil hat on. Interest rates are going to be cut. That way, people are willing to invest more into the AI stocks once ChatGPT, OpenAI, X, Tesla, Elon Musk's, their AI companies or whatever, they go public. So there's that theory. So well, just as it says, it's overvalued, and it's becoming more and more overvalued. And since AI is going off, so while OpenAI and Grok and other type of Meta and other types of AI companies are about to be in the market towards the end of the year, that doesn't mean there's not like smaller AI companies that people are trying to push that are already at the lower levels. You know what I mean? So it's like, oh, check out our new, AI company. It's not OpenAI, but it uses OpenAI. Invest in us, and we have the same technology as the people that aren't even on the market yet. So money's being thrown into these companies. It's inflating. We do have what's it called? We've talked about this in the past month. The highest amount of people can't pay back their debts. People are doing payday loans. People are able to buy houses. Reports earlier, people aren't able to sell their houses because they're so expensive. So, and then now we're at war. You know what I mean? That's just like that's a cluster. Of course, I imagine it's going to crash. Now, that being said, I know a lot of people think that when a market crashes, it's like, the 1920s. I think it was like, what was it, like 1923 or something like that. It was the big market crash, and it set off like the Great Depression, not the Great, it set off like a terrible, terrible time for the United States, and it lasted like, I read a book, I can't remember. It was like 7 years. The market didn't start improving, or like it struggled to improve for 7 years. From my research, crashes are like, they don't last a while. You know what I mean? Does that make sense?
Yeah.
Like, it'll crash, and then I'm sure there's someone gonna be like, well, that's a sale, and start picking it up again. You know what I mean? I don't imagine it'll crash and then just keep crashing for a while. I do believe there will be a what's called a rebound, especially with the amount of people who are investing nowadays. Back then, like the 1920s, I think it was only like 5-10% of people were investing, kind of thing. Might not even be that much, but today, I heard the numbers at like 50, not 50, like 30. You know what I mean? People who actively like own stocks and that aren't included in their like their 401ks or retirement stuff, whatever. So yeah, it'll crash, and crashes don't necessarily mean a recession, but most recessions usually have a crash. Does that make sense? Not all crashes means
Yeah.
recessions, but most recessions usually have crashes. I don't know. I mean, if I really had to put money on it, I would say yeah. We're probably going to be heading towards a recession, and that's what the Fed is kind of preparing for. You know what I mean? Cutting interest rates, trying to boost up boost up the stock market, especially with the introduction of all the AI, the big AI companies. But people can't pay their rent. Prices are going up, but for groceries. So, you know what I mean? Am I making sense?
No, I understand.
We might be
I
heading
get you.
toward we might be heading towards a recession. I don't know how bad it'll be. Recessions is just like what? It's like 2 quarters of like negative GDP or something like that.
2 quarters.
Yeah,
Yeah.
give me a second. Let me look it up so I'm not a complete idiot. Um,
Yeah, I think it's 2 quarters of negative GDP growth.
uh, recession definition. Uh, downpour. Yeah, 2 consecutive quarters of negative GDP. Okay, cool. Yeah. So, but that's the thing. We've stated this before. We are not really a country that has a lot of like our factories here. You know what I mean? We still have factories for sure, but nothing like we had in like the 70s, 80s, heck, even like 60s. We're mainly a country that produces services. Does that make sense? So, it, the numbers could be skewed, which I wouldn't put it past the government to skew numbers, but
Mhm.
they might be like, look at all the services we provide with AI. You know what I mean? Boom,
Yeah.
because we have the AI. We're gonna have an AI boom with at least stock market wise with the introduction of these the companies I was talking about. So then, bam, it'd be like, oh look, like we don't have a negative GDP because we have, you know, Google Plus. That's my theory. If I had to say, I don't know if it'll lead to a recession, but and even if it does lead to a recession, I don't know if it's like time to start building a cabin in the woods and growing your own food. You
Mhm.
should know how to do that though, because you never
Right?
know. Warren Buffett, investor. Oh, anything to add before I continue?
No,
Nope. Okay.
you're dead
Warren
on.
Warren Buffett says investors could be quote playing with fire unquote. Um, Another popular market metric is the Buffett indicator, which also measures valuations, but in a significantly different way than the Shiller Cape ratio. The Buffett indicator measures the relationship between total market cap of all U.S. stocks and U.S. GDP. The higher the ratio suggests the overall market may be overvalued, while a lower ratio implies it's undervalued and a prime time to be buying. I mean, yeah, okay, I mean, I guess, but it's like that's the same thing as saying buy low, sell high. Everyone's got different ways of doing it, and because you can, I think like one of the earliest iPhones had the stock app. You know what I mean? It's not like something you have to calculate. However, I do have a calculation for that. I wrote in my one of my notes, intrinsic value kind of stuff. So you can do the numbers. Most people are doing that. Most stock market apps are kind of doing that for you. So unless you are like a day trader, a lot of this stuff probably isn't too important. You know when the market is down. What should investors do right now? Again, no market indicator can predict exactly what stocks do. Thanks. Even if a recession is on the way, the market could potentially be poised for many more months of growth before a downturn takes hold. But that doesn't mean you can't prepare. Prepare is the best way to protect your portfolio against a recession or a crash. Is to invest only in high quality stocks with solid foundations. I guess like the S&P 500. That kind of holds steady, but that's the concept of put a bunch of eggs in your basket. You know what I mean? If one goes bad, you still have a basket of eggs. Does that make sense?
Yep.
So,
Yep.
but and let's see. The healthier the underlying company is, the better its chances of thriving over time, despite short-term volatility. Well, we can get into that. So, when it comes to companies, usually smaller companies or companies that have higher volatility don't survive big crashes because people don't want to invest in it. People don't buy the product. So it's kind of like Darwinism. Is that kind of what I'm thinking of? The only the toughest
Yeah.
survive kind of thing. So when they say like, oh, with a portfolio of healthy investments, what they mean is generally stocks that A, have been around for a while, B, have a steady history of maintaining or slowly increase or slowly decreasing in price. But it's more or less how many things can you nail down to the floorboard before the earthquake happens. Generally, things that are already nailed down, you don't have to worry about. But that doesn't mean you shouldn't worry about them. Now, sorry, man. That being said, when crashes do happen, if you're fortunate, this is not financial advice, do your own research. This is my research. If you're fortunate enough to have some money, maybe you sell now before the crash happens and you have some money left over, buy low, sell high. You know what I mean? It's a.
Yeah.
Now, granted, a lot of people are investing more nowadays. News is traveling at a faster rate than ever before. I'm probably not the only person thinking that. You're probably not the only person thinking that. You know what I mean?
Yeah.
So it's kind of a weird thing to think about. Like, yeah, prices might go down, but they might drop 5%. Bunch of people see that as a sale and pump the numbers up. Now, granted, that does mean the market's still overvalued, but being overvalued, like if people want to believe that's what it's valued at, that's what they'll value it at. You know what I mean?
Mm-hmm.
With like larger companies, they can get away with it because there's so many people investing into them. Smaller companies have to worry about being overvalued because one little, what's called, break in the chain, the armor comes off. Bigger companies don't necessarily have to worry about that right now. Okay, this is not financial advice, but they did some numbers. So about investing during crashes or whatever. Nvidia, if you invested $1,000 in 2009, today you'd have $459,000. Apple, if you invested $1,000 in 2008, you'd have $50,305. Netflix, if you invested $1,000 in 2004, you'd have over $500,000. Now, I'm gonna add. So Apple, I can see Apple. You know what I mean? Prices go up, inflation, whatever. I know we talked about Nvidia and we talked about Netflix. Nvidia really only got their boom, and Netflix too, during the COVID stuff. You know what I mean? Nvidia, at least at start, the reason why their stock was going up was because, you know what I mean, like shippings were being or having places were having problems shipping. You know what I mean? Because of COVID. So a lot of ports are going down or they're slowing down. So supply and demand. But not only that, there's probably even greater demand. People are stuck at home. ah, I guess now would be a good time to build that PC I was talking about, you know. And then you
Right?
had so then once those prices go up, you have scalpers, you know what I mean? And people buy stuff from scalpers. That's why scalpers exist. And if I was Nvidia, I'd be like, well, clearly these people are willing to pay, 8,000, not 8,000, that's stupid. People are willing to pay $1,200 for this basic GPU, whatever, you know what I mean? So that was
Mm-hmm.
during the initial COVID, and then now recently the AI boom. Companies all over take buying as much, RAM and stuff like that as they can, which Nvidia makes RAM, right? Yeah, like you know what I mean. All this technology is
Yeah.
exploding, and then kind of same thing for Netflix. Everyone's hunkered down at home. People just started buying Netflix subscriptions, and it had a boom. You know what I mean? So again, if you look at Nvidia and Netflix, I would say probably one of the two biggest companies that skyrocketed during the COVID boom, almost some $500,000 ish, as opposed to Apple. Everyone's got a phone. Everyone's using a phone. Only 50,000. So I know with Nvidia and Netflix, it's nice to think about like, oh my god, $1,000, and then all I gotta do is wait 20 years. I could be half a millionaire. That's nice to think about, but you can't predict stuff like that. You know what I mean? Unless you're Nancy Pelosi. But you can't predict something like that. You know what I mean? I think the Apple example much better, like realistic view of how much your stock might go up. Nvidia is a pretty number, Netflix is a pretty number, but they had extremely specific circumstances that led to that. Does that make sense?
Mm-hmm.
But and I guess if I had to say, if I want to talk more economics about it, less about finance, this will probably create a bigger divide between I want to say the haves and have-nots. The people who can steady a market crash and then have money and spend it over, as opposed to people who are living paycheck to paycheck, taking out payday loans, can't afford rent. Those people aren't going to be able to buy stock. You know what I mean? They're too busy trying to buy food. So yeah, there's that. That's my opinion on that.
Yeah.
Uh, so yeah, do your own research. Long story short, do your own research. I'm not gonna tell you what to invest in. Uh, that's for Patreon. Uh, I'm predicting a crash. If I had to put money on it and a gun to my head, I'd say we're expecting a crash, mainly because of the oil
Yeah.
retaliation. If it wasn't for the oil retaliation, I don't think there'd be a crash. I think people wouldn't care. And even with the oil retaliations, people will see a sale. Will it lead to a recession? I don't know. But
I
anything
don't think it'll
more?
lead to a recession. I
Yeah.
think we're probably going to see it's going to be like $3 trillion wiped from the market, and it's not going to change anything.
Yeah. Yeah. Because again, sale, or wherever that song went.
Yep.
But speaking of marketplaces,